So let's talk LLC operating agreements. This is probably one of the most boring topics that you could possibly think about when you're trying to set up your business. And probably the last thing that you want to talk about is what an operating agreement is or what it does. A lot of people have them simply because they think that they're legally required, and they typically are. But a lot of people don't actually put a lot of effort into thinking about what might actually be required and what should be included in an operating agreement. And for better or for worse, a lot of people just don't know any better. And that's kind of the reason why I wanted to do this video. So one of the most common issues that we see in any type of partnership dispute is the lack of an operating agreement. And the reason why that's so important is the operating agreement controls how the individual parties are supposed to interact with each other. So it's a contract that determines what your roles and responsibilities are and that what they're supposed to be inside the company. If you don't know what that is, then it's hard to say that you didn't perform what you were supposed to do, and it's hard to say that somebody else didn't perform what they were supposed to do if there's not that contract that lays out what y'all's expectations are. Think about like having a roommate. If you've ever had a roommate and y'all ended up getting into a dispute about who was supposed to be doing the dishes, and there was never a clear expectation or understanding on the front end on who was supposed to do what. Sometimes you have to have that sit-down conversation and say, okay, listen, I'll agree to do the dishes as long as you agree to sweep the floors once a week. And there's that trade-off. The business requires the same thing. Inside of your business, you're going to have different expectations that are going to be required on a day-to-day basis. Somebody's going to have to be responsible for writing checks. Somebody's going to have to manage the staff. Somebody's going to have to make sure that bills get paid and that money's coming in. Those different responsibilities are typically designated by default, but there's very rarely a written piece of paper that defines what those responsibilities are. And that is what an operating agreement is. It's how the company is supposed to operate. Now, there's a lot of other provisions that we include in an operating agreement. We'll include tax provisions. We'll include, oftentimes, if there's some type of dispute, how that's supposed to be handled. But generally speaking, the reason that we have the operating agreement is because people ultimately make up a company, and those people have a right to know what their expectations and their responsibilities inside the company are supposed to be. So if there is not that document, then you really don't know where you stand. So there's a few things that you should think about whenever you're thinking about your operating agreement and what should be in there. First things first, always be very clear on who is an owner in the company and who is not. Owning an LLC is like having a city with a city wall. Like having an invader at the gates. If they're able to get through the city wall, it's very hard to push them back out. But as long as they're on the other side of the wall, it's very easy to keep them there. Same idea with an LLC. As soon as somebody's in, it's very difficult to get them out. So you want to be very clear on the front end who is a partner, who's a member, who's an owner of the company. And you want to make sure that that's very clear and very explicitly laid out. Second thing, think about who is going to have any responsibilities generally inside of the company. So you need to think about people that are going to be in charge of managing the day-to-day operations, who's going to have the ability to sign contracts or otherwise execute any type of documents for the company, sign checks, hire and fire, all of those responsibilities. A lot of people don't know this. By default, in an LLC, any member has the ability to make those decisions. That means that you can have a member hire somebody in the morning and then the other member fire them in the afternoon, and neither one of those is illegal unless there's an operating agreement that specifies what those expectations are going to be. Third thing, you need to set limits on what the authority that people will have will be. The most common one is some type of expense limitation, so that nobody can have a certain amount of expenses above somebody else without running it by somebody else. Now, you might also want to have other restrictions, where one of the most common ones is nobody can unilaterally declare bankruptcy for the company. Somebody can't unilaterally sell all the assets of the company. Those are all pretty standard provisions that you'll see in even basic operating agreements like you'll get from LegalZoom. But those types of agreements, the standard form agreements that you'll get off the internet, typically won't have the more nuanced restrictions such as spending limits or who has the ability to hire and fire. Lastly, you need to figure out how you're going to divvy up the money. This is obviously the reason that you got into business. You wouldn't have set up the LLC if you thought you weren't going to ever make any money. So you need to have some level of expectation of how that money's going to flow. If somebody is going to make a contribution that gets a priority return, that's got to be in writing. That can't be handled after the fact. It's got to be somewhere in your operating agreement. Otherwise, your distributions are going to be equal based upon the percentage of ownership. If somebody's 60-40, you make $100,000 that year, then 60% goes to one and 40% goes to the other. You've also got to be clear if somebody is working full-time, whether or not they're going to receive a salary. So like I said, in that scenario, the 60-40, the 40% partner could be working 50 hours a week and still getting 40% of the profits and nothing else, no salary, no nothing. So if there's going to be some type of wage compensation, that needs to be properly reflected in your operating agreement. So you need to make sure that not only you know where the profits are flowing from, but you also got to know who has to pony up money in case the company needs it. It's not uncommon that companies simply run out of money in the first couple of years of our operations. Heck, there's 30-year-old companies that we've represented that needed to put money back in because of an expansion that they were trying to do or something like that. So you need to have some level of expectation of how that money is going to come into the company. If that's going to be through loans provided by some of the owners of the company or whether it's a capital contribution, there's significantly different effects on how that's treated for tax purposes and for legal purposes. So you need to have some level of expectation of how that's going to be treated. Now, these 4 items are just a general overview of some of the things that you should think about when you have an LLC and when you're drafting out your operating agreement. But if you have more than one owner of an LLC, I cannot recommend strongly enough speaking with an attorney and laying out some expectations of what your operating agreement is going to look like. I will say that if you have more than 2 owners in a particular company, you're probably making a massive mistake by having anything other than a customized operating agreement. There's just simply too many variables, too many changes, too many default rules that can end up hosing you on the back end that you just don't want to have bite you in the end. So when you're going through the process, if you have a single member LLC, I'll be honest with you, it's pretty hard to screw up a single member LLC with even a basic operating agreement. But as soon as you add another person, the relationships get exponentially more complex with each person that you add in. And so if there's not some type of central operating document, some operating agreement, or now what Alabama calls a limited liability company agreement, then you're going to be setting yourselves up for failure. So make sure that you have something in writing, and I always recommend having an attorney walk you through the process so that you can discuss some of these topics that are important that you need to have some type of rules on. Now, the best case scenario, you sign the operating agreement, you have all those tough conversations on the front end, and so you know who's going to be washing the proverbial dishes, who's going to be sweeping the proverbial floors. Maybe sometimes you're doing both of those things inside of your company, but you've done the difficult work of having the conversation about who's supposed to do what. Now, you may never take that document out of a drawer, but at least you've taken the time to discuss those things on the front end. I've seen many business partnerships break up before the business ever started because they realized that there were certain issues that were non-negotiables for both parties. And they were so glad that they worked that out during the operating agreement phase when they were negotiating that before they started spending thousands, tens of thousands, sometimes hundreds of thousands of dollars in pursuit of a business that would have ultimately failed because of the disputes between the partners themselves. So if you're in the process of setting up your company and you've formed an LLC and you need to discuss some of the provisions that you should include in your operating agreement, give us a call. Again, my name is Tripp Watson with the Watson Firm, and this has been a conversation about LLC operating agreements, and we're also called limited liability company agreements. But I'll close on this one final note. You can probably find a lot of these documents on the internet. Now, I'm not one of these attorneys that's going to tell you that everything on the internet is bad. There's a lot of good stuff out there. Heck, I know even good attorneys that will take other documents that they found on the internet and tailor them to their specific clients. So there's really nothing wrong with that as long as you know what to look for. But if you have one of these standard operating agreements, don't expect a whole lot out of it. It's probably not going to protect you nearly as much as you think it is. So you've got to be very careful about what the level of protection that you're going to get on a document like that. So even if you do start from an agreement that you found online, you want to make sure that it's reviewed by an attorney and somebody that knows what they're looking for, because it can still cause problems down the line. But again, if we can help you out, please reach out to us. Until then, have a great one.